It is a pleasure to be virtually joining you. I'm sorry I can't be there in person. I just came back from Dubai. I'm now back in South Africa, and London just wasn't on the cards this week. The country was lifted, South Africa was lifted off the red list a bit too late for my planning purposes. So apologies, but thank you for having me virtually. And Gabby, thank you very much for the introduction. You can see me, but I can't see you, so it might actually work well. Gabby, I have a presentation, so I'm going to just bring that up on the screen, and you should be able to see that on your side. Ladies and gentlemen, I will be providing a relatively brief political risk profile of the African continent and look at some of the increasingly complex regional risk trends that we are seeing across the continent at the moment. Now, I'm going to go straight in here and look at particularly the political instability that we have seen over the past few months. We have seen default events last year in Zambia. We have seen economic recessions through the globe in 2020, but this was supposed to be the year when Africa was going to recover. And the very start of the pandemic, my associates and I came out with a bunch of reports saying that the longer term impact of the pandemic would be felt in political risk and civil unrest, as well as broader political violence. And that is, in fact, exactly what we are seeing across the continent at the moment. We are dealing with the defaults. We are dealing with debt restructuring. Most of Africa's economies are recovering, at least going back into positive territory. But we are now seeing a spree of political violence. Here in South Africa, we had 6 days of unprecedented riots in July. There have been 4 successful coup attempts so far this year, which is the most, I believe, in about 20 years. In terms of those figures. In fact, there have been 6 coup attempts so far this year. And just while I'm speaking, northern rebels are marching on the capital of Ethiopia, Africa's country with the second largest population in Africa. So, there's a lot to cover. Let's not deep dive too much into specific incidents and trends here, but rather look at what this means from a commercial perspective, what this means for debt, particularly relevant for the next session, Gabby, and then also look at economic trends revolving around all this. Now, what is happening with all these coups? I said there have been at least 4 so far this year, started in April, where we saw an unconstitutional transfer of power within the same family. That then was followed up in Mali, where the military very quickly consolidated its own power base and staged a second coup within 1 year. And then a follow-up in Guinea in September. Again, special forces copied the Mali-style coup and overthrew a long-time president there. And then last week, in Sudan, not a surprise at all, really. But the coup was not really a Mali-style coup. It's more a copycat of Egypt's coup attempt from a few years back. The only difference is that in Sudan at the moment, there's huge popular resistance and distrust of the military, unlike in Egypt. So potentially, if you want to be pernickety about it, it's probably more like a Myanmar-style coup of what we're seeing here at the moment. And as we are talking again, there are negotiations underway to try and potentially reverse this coup in some way or another. So we have to stay tuned on that going forward. But Gabby, you may not be surprised that there are more countries in Africa that are at a high risk of a coup. At the moment, from our perspective, we see Zimbabwe, South Sudan, Somalia, Lesotho and Eswatini, formerly Swaziland, being at a high risk of a coup, or at least a high probability of a military intervention of some sorts over the next 6 months. And, just because of what's going on in Ethiopia, we probably should throw Ethiopia in that category as well at the moment. Now, almost half of Africa's countries are at risk of some sort of a coup d'etat over the next 6 months. It's not saying it will definitely happen, but there are indicators and trends which are saying that these type of incidents are more likely now than usual. And again, even in South Africa, those riots I mentioned earlier have been interpreted by some as having been an insurrection type of event. In other words, aimed to cause political upheaval. And the president himself said it was an event trying to overthrow his government. So, this is certainly nothing new that we're seeing in Africa. In fact, if you look at the last 17 years, coup d'etats have happened around that central belt. And this is exactly where we've seen over this year so far most of this political instability happening. But this is a trend which, unfortunately, has come back. It's a 70-year-old trend which started to dip around early 2000s, and now, because of the pandemic and various other factors, is coming back around that central part of Africa in the Sahel and the West African region. Now, if you take those layers out and just look at what that does for Pangea-Risk's risk ratings for particular countries around the continent, you can see quite a few countries still stuck in that red severe or orange high risk rating category. And that, Gabby, we have certainly brought back most of our risk ratings into more positive, optimistic territory over the past few months since March 2020. But, certainly for a number of countries, they are stuck in a cycle of political instability and political violence. And on the other hand, you can see here there's some very optimistic blue here, particularly in Benin and in Rwanda, but a number of other countries as well, from Egypt and Morocco in the north to Namibia and Botswana in the south, and Ghana and Ivory Coast and Togo in the west. Quite a few sprees of more optimistic, moderate risk rating in the 1 year outlook. Now, obviously, this has an impact on economic growth, and vice versa, economic performance has an impact on a country's risk ratings. At the moment, we are seeing Africa very much entrenched in a 3-speed economic trajectory, exactly where we were in 2016 after the oil price volatility shock, of which some countries like Angola and Nigeria have still not recovered. What we are seeing at the moment is a bunch of countries which are still in recession. Angola, Central African Republic, Republic of Congo will remain in recession again this year. And on the other hand, we have a bunch of countries which are really growing at the moment. The World Bank is forecasting about 3.3% growth across Africa in 2021, or at least in the sub-Saharan part. That is way below where the rest of the world seems to be growing, and it is certainly well below where Africa used to be growing. So there really is a different trend, and most of that comes down to vaccinations. The main drive of economic recovery is the COVID-19 vaccination rate, with the outlook for low-income developing countries darkening considerably due to the worsening pandemic dynamics. That's according to the IMF. It's also according to David Malpass at the World Bank, and it's exactly what we heard from the G20 in Italy recently, and also what we're hearing at various other global conferences going on, trying to deal with all this. So this is really, Africa is no longer in that same optimistic trajectory, or at least the majority of its countries are not in that same optimistic trajectory anymore. So what do I mean by a 3-speed trajectory? Here we have a number of countries that are being boosted by higher commodity prices, such as, for example, Burkina Faso, South Sudan, and Guinea, whose GDPs are all set to grow by 5% or more. This category also includes countries who led the pre-pandemic economic growth rate charts thanks to relatively superior fiscal and monetary governance. Unsurprisingly, these countries still are Ivory Coast, Kenya, Benin, Niger, and Rwanda. And then moreover, the fast-track countries also include those countries whose economies dipped by the most in 2020, notably Botswana, Seychelles, and South Africa. Those three had some of the deepest economic contractions last year. So arguably, their recoveries this year are really much a correction from last year rather than a longer term economic growth trajectory. Meanwhile, the majority of African countries will fail to match the global economic recovery rate of about 5% growth. And that's mostly because they suffer from low vaccination rates. And this also includes some of the major regional economies like Nigeria, Ghana, Egypt, Algeria, and Sudan, not even counting what's been happening in Sudan recently. And in North Africa, Morocco does lead the pack with a projected GDP growth rate of about 5.7%. But all the other countries in this region lag despite the deep economic contractions of 2020. And then the slowest speed track includes countries with structural economic weaknesses, such as Angola and the Republic of Congo, as well as war zones and failing states such as Central African Republic. Matching our forecast at the beginning of this year, Angola will suffer from a 6th consecutive year of economic contraction, while the Republic of Congo, or Congo-Brazzaville, marks a 7th year of negative GDP growth. And other African countries that will barely register economic growth this year includes the Common Framework, or DSSI Common Framework applicants like Chad and Zambia, as well as debt-distressed countries like Namibia, and states with deep inherent imbalances like Sudan and Eswatini, formerly Swaziland. Interestingly, for the first time, the IMF is not providing data on Ethiopia. This was the world's fastest growing economy for several years. Ethiopia now no longer has projections for the 4 years after 2021. So that means that the IMF is basically now lobbing Ethiopia, a former champion of investment, in the same category as other war zones like Afghanistan, Libya, and Syria. And of course, the ongoing civil war in the northern regions and fast spreading into central regions of Ethiopia is the most likely reason why multilateral lenders and international financial institutions are withholding their predictions for the country's economic recovery and for the next 4 years ahead. And that, of course, can have an impact on quite a few different aspects, including common framework debt negotiations and indeed the privatization spree in the country. And this really takes me back then to what the Bretton Woods institutions were talking about last month. In Washington, D.C., the IMF and the World Bank essentially set the tone for Africa's debt restructuring. So if we ignore all the scandals and the rumors and the geopolitics being played out in Washington last month, actually a couple of key messages for Africa came out. First of all, the World Bank and the IMF have agreed, despite their urging, that the G20 DSSI will not be renewed when it expires at the end of next month. The DSSI only really brought about $7 billion in savings, rather than the $18 billion potential savings that could have been saved in bilateral debt interest suspensions. But for some countries, they've really benefited from this, particularly Angola and a few other countries here which really have taken a big savings from the DSSI. Angola, in fact, DSSI savings accounted for 4.7% of GDP, 5% in Mozambique, and 5.7% in tiny Djibouti. And even reluctant countries like Kenya ended up joining it at the beginning of this year. So where do we go from here? With the DSSI terminating, still a number of DSSI eligible countries like Ethiopia and Chad and Zambia have already applied to the common framework. And the World Bank has also urged low and middle income countries to consider restructuring their debts when the DSSI does indeed expire. Other African countries that are not DSSI eligible, like Sudan, have also begun their debt restructuring talks with significant support from international financial institutions and partner countries like France, which is offering to spend some of its IMF special drawing rights on a bridge loan to repay IFI arrears owed by Sudan. Now, this, however, is only 3 countries so far which have applied to this common framework, and a whole bunch of others could in fact still join here. In 2020, the debt to GNI ratio was above 100% in 4 sub-Saharan African countries, including Mozambique, Zambia, Cape Verde, and Angola. Only one of those so far has joined the common framework. I would argue the other 3 may indeed still do so, particularly countries like Angola, which are still unable to recover from that 2016-2015 oil price volatility, the last major crisis, let alone being able to cope with the current crisis. And a number of other countries, potentially Namibia or a few others, which I mentioned, might actually also fall into these categories. But in terms of our sovereign ratings, and these are very much based on political inputs, Gabby, rather than what you would see from Fitch or S&P, etc., we are currently rating a number of countries at severe risk of sovereign defaults in the 1-year outlook. And this includes the usual suspects like Mozambique, already in default, or Zimbabwe. It, of course, includes Sudan, Eritrea, now, of course, also includes Ethiopia and Chad, as well as the Republic of Congo. However, potentially good news here to end off with is that Zambia is likely to score a IMF program at the beginning of next year, and after a debt sustainability audit is completed, it would take Zambia out of that sovereign severe red rating category. So we are seeing a real improvement on the cards here for Zambia, with a very likely deterioration, however, for Ethiopia and potentially also for Sudan's, depending on how things are going over the next few weeks. Now, I know there is a session on sovereign debt following mine, so certainly this should tie in nicely to that conversation. And I also wanted to mention, Gabby, for everyone there today, is that we've recently put out a special report exactly on this topic, on the 3-speed economic recovery in Africa, and how it ties into geopolitics, particularly the debt restructuring negotiations and the reluctance for China to be included in some of the debt relief that is being offered. And similarly also what climate change adaptation could potentially increase the debt burden in a number of African countries. Obviously, Africa is one of the most vulnerable regions in the world to climate change. Rather than keeping on reacting to climate disasters, the IMF and the World Bank are really boosting climate change adaptation financing. But much of that, however, is not coming through grants. It is coming from concessional lending and also increasingly from commercial lending. And then we have to ask which African countries are in fact able to take on yet even more debt on top of what their current burden is. The World Bank recently came out saying that on top of the $450 billion that Africa will need this year and the next 2 years, Africa's economies will need $50 billion each year for the next 10 years to try and cope with climate change adaptation. And most of that, of course, will come from further debt issuance. So if you would like to have a copy of that special report, which we recently published, drop me a line at insight@pangea-risk.com. And also any other questions you may have about my presentation, feel free to drop me an email, because I'm not there today, so I can't have a chat with you or give you my business card. But otherwise, Gabby, I believe that you may have a bunch of people in the room who might potentially have any follow-up questions, and I know you always have some keen questions as well. So let me know if there's anything you want to bring to my attention or ask any questions. Thank you very much for your attention, everyone.
Hi, Rob. It's Giles here from GM Corp. Rob, just that the slide you had around the central, call it Sahel countries, and they're the ones that have experienced the coups in the past. For someone like myself, marketing a new fund, Africa Focus, trying to get a positive story out. Let's say if we sub-Saharan Africa focused, what is a positive note to say that you don't think sort of realistically that would spread to new countries, let's say, if it has historically remained in that area?
Thank you, Giles. Thank you for your question. You know what, I'm going to bring that slide straight back up again so we can, it's nice and easy to take a look at it. So, Giles, yeah, I mean, these are not fun stories coming out of certain parts of Africa. And it is certainly what is capturing news headlines at the moment. And it is certainly causing some financial losses to quite a few investors entrenched in these countries, particularly places like Ethiopia or Guinea, where there's massive investments in commodities and manufacturing has come in over the past few years. But we always have to realize that very often these countries went into the pandemic with structural weaknesses in place. It's those countries which, you know, in our Pangea-Risk scenario have been rated in this red severe risk category for the past few years and then went into the pandemic and suffered not only an economic contraction, but also political instability and structural weaknesses. It's those countries that are most vulnerable. So, Giles, it does not mean that therefore poses an immediate contagion risk and could spread from one country to the next. Obviously, some countries are more vulnerable to political instability than others. That's a phenomenon we're seeing not just in Africa, but all across the world. We have to look at, most of all, which countries have sound state institutions, which countries have strong fiscal and monetary frameworks in place, and then also countries which have seen less political violence or strikes, riots, civil commotion risks over the past few years. And that those indicators should then essentially offer a risk mitigation buffer to avoid countries around Ethiopia or countries around Sudan from suffering the same degenerative risk impact. So I hope that helps you out a bit from your perspective. It's certainly not easy selling Africa straight after the pandemic. As I said, quite a few countries are not scoring the same economic growth rates as the rest of the world, at about 5% GDP growth this year. But there are still some real stars out there. And I mentioned them earlier. These are the countries with those strong fiscal and monetary frameworks in place, like Ghana, Ivory Coast, Benin, Rwanda, that went into the pandemic and were far more resilient to its negative and debilitating impact. It's the countries on the other side which went in already vulnerable that have seen the most exposure to its negative impact. So thank you very much for your question, Giles.
I've got a question which is similar to Charles. I mean, Charles's question was about contagion risk going forward. I was quite interested when looking at your slide, and my question is, has there been contagion risk? Why is it that across the Sahel you've had these coups? Has one country coups led to its neighbour to follow suit? This has happened purely because of the pandemic. Are there other factors across the Sahel that's created this red zone that you have here now?
You're absolutely right. You can't blame the pandemic for all of Africa's problems at the moment, or indeed the globe's problems. As I said earlier, there were underlying issues going into the last few years of economic crisis and indeed political crisis. And particularly on the Sahel, of course, we have seen for the last 15 years insurgencies starting in Mali and then spreading quickly to other countries, particularly Niger, Chad, and Burkina Faso, and now also increasingly penetrating those northern borders of your usually stable West African countries on the Gulf of Guinea there, like Ghana and Ivory Coast. As I mentioned earlier, those countries do have buffers in place. So far, we have not seen a significantly higher risk of instability or terrorism attacks on those Gulf of Guinea countries. But some countries have been more prone to this type of contagion. in particular, countries where you've seen marginalized, economically and politically marginalized populations, which have not seen the benefits of the trickle-down effect in Africa, particularly in the Sahel and West African region and the Horn of Africa region, from major funding and foreign investment over the past few decades. It's those communities which have been most prone to radicalization and indeed also to staging protests and to building into the momentum of this political instability. So the pandemic, therefore, with the taking away some of the foreign investment that came into Africa and seeing some of the lockdown regulations from last year, and then seeing some of the broader authoritarian or arbitrary political decision-making over the past year as well, with more power being centralized in these jurisdictions, has really created a negative kickback effect. And a number of these countries here are now seeing the pandemic as their final drop. And hence, we've seen military regimes step in to oust democratically elected governments which were not unable to cope with those various different political, economic, and security factors. It's in fact in countries like Egypt and in countries partially in Mali and also in Guinea, the population has been welcoming the military interventions because they saw that the democratically elected governments before then, accused of mismanagement and state corruption and other allegations, were unable to cope with these problems sufficiently. But just because you see a military coup does not mean that a country actually will suffer further negative degradation of its risk rating going forward. It may mean that Washington, D.C. will put you on a coup status, but it does not mean that the actual situation on the ground will deteriorate. In some of these countries, particularly like Guinea and Mali, a military regime may actually satisfy the local population's demands more than the previous democratic governments have done.
I've got one more question which I need to kind of squeeze in before we finish a panel.
Yeah, hi. Robert, thank you very much for this very interesting presentation. My name is Andreas. I'm working for Deutsche Bank in Nigeria. I have one question to Ghana. You mentioned Ghana a few times. I'm a little bit surprised because what I understood from your presentation is that the outlook or your outlook is quite positive. You could read various reports about Ghana, about debt levels, the procedure in their industrial reformation. So what gives you the confidence? You mentioned also the good fiscal framework. Could you give some more examples where this confidence comes from?
Are you sorry, Andreas, and thank you for your question. Just are you questioning my confidence in Ghana or
yes,
my lack of confidence in Ghana?
No,
sorry.
Your confidence in Ghana, if I understand that correct.
Thank you, Andreas. I'm usually questioned for my lack of confidence, so thank you. Just to put that clear. The confidence in Ghana is very much built around some of the reforms that we have seen in the country, in the power sector, in the revenue collection, particularly local domestic tax collection. And even though there are frequent protests by the opposition parties and some industrial groups, there is no threat to the current government per se at the moment. So the state institutions in Ghana and the fiscal and monetary frameworks have survived the past few years of challenges. So I'm not going to say that the debt sustainability in Ghana is looking rosy, but what I will say is that it does match similar parameters or indicators of a strong state like Benin and Ivory Coast close to Ghana, which give it a stronger framework, a stronger base to go and recover from the pandemic. So there are certainly still issues in Ghana, and perhaps we can talk about this offline as well, because I realize Gabby's got time restraints. But it's the state institutions and the fiscal and monetary framework, Andreas, which have given us quite a bit of confidence for Ghana going forward. Just one thing to watch before you cut me off is just the repayment to arrears from the power sector. That's a very important aspect we have to keep on watching in Ghana.
Hi, Rob. It's George from Investec in South Africa. The continent has suffered a great deal over the course of the last 50 or 100 years. There's been a lot of turmoil. It's been very volatile. And you've clearly got some clear views around maybe the debt security associated with the strain from the pandemic and maybe even climate change for the future. What about trade? Right, outside of your red countries, do you foresee stress on trade defaults going forwards because maybe of these increased stresses from the pandemic, etc.?
George, thank you very much for that question. I think it's crucial to look at that. I mean, one, there's been global supply chain challenges. Two, there are still let's call them inequalities or imbalances in the economies in Africa. But what we are seeing now is more and more countries being completely opened up, airports and seaports being completely opened up, and more investment going into this type of infrastructure. In terms of trade defaults, we are seeing not that much trade volume as pre-pandemic, but we are seeing less trade defaults. And that certainly is, I think, a more optimistic development at the moment. George, I've been asked this question multiple times over the past week, and we are actually working specifically on a report at the moment about trade in Africa and the impact of the AFCFTA, trade default risk, as well as the infrastructure boost that we're seeing in several parts of Africa and how that can benefit trade. So, if you don't mind, I actually going to reschedule the rest of my answer to that question to once we've actually done that research, because it's a really interesting trend, and you and Investec are not the only ones asking about it at the moment. So thank you for that, and I promise I will follow up with you.